G'day traders, Sam here from Trade to Prosper to give you another crypto review. Now, people are probably thinking I'm a bit bearish on some coins, and I'll give you reasons for it. Now, if we look at the SP 500, what we can see is there's twofold. It's a bit complicated, but let's give it a go. We saw this taking place, and what we had is more touches. So we had 1, 2, 3, 4. So it's like four touches and a breakout compared to this here, only 3 touches. So the pressure was to the upside with the touches. However, when we look at it from this perspective, we can say that if we look at the bottom one, we have 1, 2, 3, 4, 5 touches to the bottom, and if we look at from the top, 2 touches to the top. So the pressure realistically is to the downside because it's getting the most touches. It's pushing down rather than up. So the pressure is towards the downside. So whenever we see, and I'll just give you an example. So we have an ascending wedge, and usually ascending wedge touches that first. Okay. Now what we have here is symmetry in touches. But sometimes that's a 4th touch. So we've got 4 touches there, whereas this is 3 touches. So in a similar, if you invert this, it's always a case where even if you have a line like that, and if you have touches like that, then you know that this has got 3 touches and that's got 2 touches. So generally the 3rd or the 4th touch shows you that the pressure is to the upside, to that level of resistance rather than the support. With that mindset, I'm not saying it's going to work 100%. It's just the way I look at things. The pressure is to the downside. Now, if we look at from this perspective, we have, this was the 200 daily, I think it is. 200 daily, which is pretty much what I see as the key level to break. And we had this broadening wedge, and if I do the Fibonacci type of thing, actually that's not the chart I wanted, give me a sec. This one here. So I've gone through the trouble of explaining it. The fib extension, which is from, if I do this one here, it was perfect. That fib extension came down to the 1.414 for support. So it was usually it's the 1.618 or the 1.414 when we have this correction. Now, is this a correction or this is a bear, like a full reversal? So now what we've done is from there to there, we put our Fibonacci, and it's on the 0.5 Fibonacci. If I do the fib extension from there to there to the top, it's on the 618. So we have support here at the moment for the 0.5. So we've got a bit of support, and this is, I think, might be the decider. The 618 could come down to here and have another support. Now, I don't think it will pass that level, to tell the truth. Even if it goes up from here, I think it'll still come down. That's my orientation because of this scenario where there's a lot of touches to the downside than the top. Okay. Having said that, look at Bitcoin. Bitcoin had an ascending channel. It actually broken into two components. I was going to actually do a whole video on this. What we have is we had a channel that was going well, and you can see that there's more touches to the top if you ignore that, there's 12 touches the top and we had a move. So if I was to do that, no, give me a sec. That's one, and where's the other one? Bugger. All right, let's do that. So A, B, C, D, E was there, and up it went. Now it didn't go much high. And what we had is problematic. I'll use that word specifically, higher highs, but very slowly. So you can see the pressure to sell is always there. So it became an ascending wedge. So he left his channel and became an ascending wedge, and you can see the dotted lines where it was an extension. And the moment we broke that level, we came down to this support level. So now we've broken this channel. So it's my thinking, either we do this and break down, or to the upside, all we have is an ascending wedge type of thing. So let's just fix that up for a sec. So what we have is clear support and clear resistance. Now I have another chart, give me a sec, for Bitcoin, that is. Now we zoom in, so if that's what represents that. What I've done is looked on the monthly candle is about to close. So we want to see what the monthly looks like. So we've got the monthly candles from the body, that's the monthly candle, and this is the body of the monthly candle, sort of gives us, and these are where I said the monthly lines are. So this is the monthly bottom. So when we look at that, the monthly level, the body of the candle, we're looking at, this is really neutral. In the past, when you look at it, when the monthly, so what usually it's red, red, or in this case black. So it keeps descending until it finds the bottom, and then we have the green candle. Here we had a red, green candle, and then the following green candle, which suggests bullishness. Here we had a red, massive red candle, which equates to this. We had a green, and then we had these descending reds still for 3 more months. So that's 5 months, and even then 6, 7, 8, 9 months of looking at the bottom. Here obviously was much shorter. Here was a capitulation, and this wick was a signal for the month to go long. So from a candle perspective, here we're pretty much more on the bearish side than the bullish side, because we retraced that move for the month. So what have we gained in that month? We are basically losing it in 8 hours. So unless this could close up more than halfway, so if we look at that, just a sec, if we do that, actually I'm not sure where 50%, that might be 50%, that's going to be 21,400. So if we can close about 21,400 in, so you can see my 618 level there. I don't know where I got it from, but actually I do. It's the macro. So 618 is there, and ideally 2 parts to it. If we close above the 618, it will be likely to be bullish. Can we recover that fast? Probably not. I don't think we can. So if this closes with a wick on the bottom, or significant wick, then that's a good sign. Right now, so with the green had a bit of a wick, this one not so much. So if this closes below the monthly, which is 19,844, that's pretty bearish. And so we are, and there's the 200 moving average as well, and the 200 weekly EMA. So it's not giving us much in conviction, except this is a bearish candle at the moment. Although Bitcoin's starting to recover a bit in 7 hours, 8 hours, we'll see what happens. But that's my thinking with the candles. Now if we go to the weekly, you can see the weekly not special. So we've got 2 red candles and a small green. It's likely, but it's a bottom. The bottom is flat. So both of them are showing a bit of strength and support at this level. Still, now if we look at the other chart, give me a sec. To be bullish, really, to tell the truth, to be bullish, we need to close above this and hold it. So if we can hold it, so this, you can see my 21 moving average on the daily and the 204-hour moving average. If we can get above it, and we've got also the 200 weekly moving average. So this level, if I was to articulate it from there, I would say that is the main resistance, significant resistance. These are spreading apart, but you can see the weekly 200 moving average with the SMA and EMA right at the 22,800 range. And currently we've got this trend line that is pretty much, so we had a bear flag here. This could be a reversal, but what I'm seeing from the other chart, so I go back to the other chart and I go to my 30 minutes, I do see this. Yep, we've got a resistance trend line, and if you look at that trend line and also the red one, which is the channel, we actually got a double top here and a rejection, and yep, we've got a bit of a bounce. This looks like a double bottom, but the thing is it came back down and it's coming back to the neckline. If it does break above this, I don't see it going much higher, tell the truth. I do see this. Look, this is a bear flag. This is, if this grinds, so if this keeps just going grinding, I see that drop. And that's what, and we have that range. So far, we've got this range. Tops there, bottoms there, and I had a chart. Let's see. No, that's not the one. It's not it either. I had it before. Maybe I just cleared it up. Okay. Let's see. Yep, I haven't got it on this chart. Well, let's do it in here. What we can do is, okay, here we go. So short-term wise, I can get rid of this. We did the top to the bottom and we hit the 618, the golden ratio. We found the bounce. It's come back to this neckline and it's pretty much holding up there. I'm not sure what the dollar is doing. We'll have a look at that next. But my thinking is, and I think I deleted them all. Actually, yes, I did. We have this. Pretty much the middle. Actually, so we have that. Bit of a range. Could probably bring it down to that level. And our monthly is just where the 618 is, right there. So we did find support on the monthly candle. I think I recall it was something like that. So it's all also close to the monthly, finding support. Now, this is not looking like an ascending wedge at the moment. It's more looking like we couldn't. No, if anything could take place, it could probably be like that as well. Right, so if I was to get rid of this for a sec, we're just playing scenarios. We could probably play that as well. So I don't expect too much in the rejection there. Yep, we haven't actually broken that trend line. People think that we've broken it, but from this perspective, we haven't. If we count those wicks, so if you look on the daily, you can do much more with like you can't ignore the wicks. So looking at a close up like I did, it gives you a bit more detail, a bit more accuracy. Okay, here we go. So it was a 1 hour that I missed out on. So if I can get rid of that, that was it there. That was my lines. And the monthly's there. There we go. So that was on the 1 hour chart. If we look on the indicators, downward pressure on the 1 hour, downward pressure, and downward pressure on the 1 hour. If we look on the 4 hour, pretty much at the top with some breaking down, and the wave, yep. So this is crossing over as well. There is downward pressure on the 4 hour as well. So, and if we look on the daily, daily's got a bit of a double bottom bouncing. So this hasn't crossed over yet. This haven't. So there is a bit of upward pressure still in there. Whoops. And if you look at that, yeah, I do think we'll play this out, this ascending wedge or some ascending channel to eventually lose strength. The way this just dropped, the bears are in control. Like I said in the past, the most likely scenario is this moving average keeps coming down. As if this keeps going sideways, that moving average is probably going to come down to here. And yeah, so the more we go sideways in that range, we might even pop our head up a bit higher, and then very similar to these guys, you can see that we spend a lot of time on the top range only to break down. So this ascending wedge was our real opportunity. Now there's one possible bullish scenario. All right, so let's look at that. The bullish scenario is that this is the V shape. Actually, pick up the other chart, it'll probably be cleaner. If we look at this, I still think we can go a bit lower. If this is our formation, we can probably still come down here and find support. And this will be our Adam and Eve type of formation. Where this line is, could be at this level. I don't think it's going to be. I think it's going to drop more. Could be right down there. But this could be our wave 3 and 4 and looking for wave 5. I think we're still going to go down more. Especially from here. I do think we're going to drop below that. If I look at the 4 hour, you can see that that's not bullish. This has really got to hold it on. And now the fact that we dropped from there to there, okay, 618, 68. So it needs to really hold. If it drops below there,